India has emerged as the fastest growing major economy in the world and is expected to be one of the top three economic powers in the world over the next 10 to 15 years, backed by its robust democracy and strong partnership. India's economy is projected to grow by 6.6% in 2025, driven by robust consumption, investment, and strong export growth in the services and goods. While global challenges persist, India's focus on the infrastructure and export growth gives optimism. Amid the challenges thrown by continued geographical conflict between Russia-Ukraine war, Israel and Palestine war, Iran and Israel attack, modest growth, global growth, and growing domestic demand have added strong growth. As the members, you are aware, your company operates in such a area where large market exists, but with a huge keen competition from the unorganized sector too. The changes in the global market, such as war situation, inflationary trends, fluctuating steel price and crude price, recent economic and financial conditions, regulatory and political changes, fluctuation and operation in the competitive landscape could hugely and severely affect the company's business operation and future outlook. Despite of all these economic and financial changes and difficulties, your company products are well received in the market and it is performing well as expected. In the growing Indian economy, witnessing the gradual momentum of surge in the GDP, your company uses regular and planned and systematic approach with a pragmatic approach, achieve sales turnover excluding GST of ₹151.94 crores during the financial year 2024-25 as compared to ₹141.77 crores in the previous financial year 2023-24, registering thereby increase of 7.4% as compared to the previous year. The company earned net profit after tax of ₹870.77 lakh during the financial year 24-25 as against the net profit after tax of ₹894.66 lakhs of the previous year, registering a marginal decrease in the profit of nearly 2.67 as compared to the previous year. Whereas during the first quarter of the current year ended 30th June 25, on the basis of the unaudited provisional financial result, the company achieved a sales turnover of ₹37.76 lakh with a net profit of ₹166.53 lakh, and the board is hopeful to achieve the targeted growth amidst of all economic adversities as a whole, with competition and prevailing inflationary trends. Your company has been striving to perform better during the current year and hopes to achieve the targeted profit. To effectively cater to the needs of the present and prospective customers, to widen the market with the economics of scales, the company has shifted its manufacturing operations from the Bharuch plant to the newly constructed new plant at our Gujarat premises at Dahej. The management is closely monitoring the manufacturing operation at the Savli plant, which is manufacturing barrels from GP6 and GI barrels, and operation at new setup plant at Dahej, which is manufacturing plain epoxy composite barrels, welded barrels, etc., with 2 assembly lines of manufacturing facilities. With a better supervision and control, the company will increase its manufacturing capacity with the prevailing benefits of economies of scale. The company has been manufacturing nearly 55,000 barrels on a monthly basis. The company's Dahej plant commissions from the internal accruals committee. Resultantly, with the aggressive and systematic marketing drive, the business and profitability of the company will get enhanced in the coming years, varying unforeseen circumstances. In order to fulfill the long-awaited expectation of the members of the company, the board of the directors of the company has recommended a dividend of ₹1.50 per share of ₹15 each approved by the members that is under general, which will absorb nearly ₹84.75. Dividend is approved and is paid on or before 12 September 2025 to those shareholders holding shares as at 8 August 2025. At this annual meeting, I retire my office and being eligible for myself earlier. He placed on record the deep appreciation of the continued support received from the various clients, vendors and suppliers, bankers, government authorities, employees at all levels, and shareholders, and hope to receive the same in future to come. I now request the minister of Infrastructure and Managing Director to reply to the questions raised by me. Thank you.
Thank you, Chairman, sir. I invite the shareholder to put their questions and suggestions to the matter related to the company and its affairs conducted during the year under review. Many shareholders and registered speakers and many who wish to speak and share their views or seek comments may also post their questions and responses to the chat box available on the members, and we will reply on the first come first basis. Sajid sir, now we request you to allow speakers one by one with a 2-minute time slot. No speaker. Hello.
Sir, we don't have any speakers.
Sir, I am
So
the
there are
speaker.
speakers. I am also speaker. I think Keshav is also speaker. We are there on the call.
Okay, you please check. Please ask.
Sir, so I have already sent my list of questions, but very quickly, sir, I am asking some more questions. Sir, since the
When you talk, please introduce yourself.
Sir, I am Keshav Garg. I am your shareholder. You already have rest of my details.
Yeah,
with
we
you.
have listed bit of areas of we have listed bit of areas.
Sir, so I am unable to understand why since the past 4 quarters continuously quarter on quarter revenues are falling, EBITDA is falling, and sir since 4 years we are stuck in 150 crore revenue and 15 crore EBITDA, and now it seems even that we are unable to hold on to despite doing so much of capex, despite increasing working capital continuously. It seems we are running very fast to stay on the same place. I don't understand. 4 years back when our net worth was 24 crore, then also we were doing the same revenue, same profit. Now the net worth is 52 crore. Now also we are doing the same revenue, same profit. So basically, why is the top line not increasing? And now with the new Dahej plant, there is the whole chemical industry is based nearby. There is a recovery in agrochem, dye, pigment, everything, but still it doesn't seem to be showing in our numbers. So I don't understand what is happening. Please enlighten us that how long will we keep on seeing the same numbers? Whenever the results come, it seems to me that it is better that I open last year's numbers and see, because it's the same numbers that we are going to show. Sir, so thank you very much, and I hope the performance of the company improves going forward. And sir, what happened to 250 crore revenue that we were expected to do next year? Will we be able to do that, or again next year also 150 crore revenue on now 65 crore of net worth? Thank you, sir.
The revenue. Okay, we would like will give the notification. Second speaker, please. Second speaker. Please unmute second speaker.
If you have the list of speakers, it would be easy for me to unmute if you call out the name.
There are 2 speakers. One is Keshav and the other one was Rohit. Please unmute Rohit.
Yes.
Yeah, thank you for the opportunity. This is my first AGM with the company. One request before I start my questions. The audio from the boardroom is not very clear. I'm wearing my headphones also. So I would like access to the chairman's speech so that I can read it. If you can send it by email, that will be helpful. And any answers that you give, if you give it a little slowly, because the audio is not clear, that will be helpful as well. Having said that, I'll go into my list of questions. I've already shared it with the company secretary in the morning. So basically, broadly, it is around growth itself. So we have spent, almost tripled our capex. The net block, the fixed assets have gone up 2 to 3x, but the revenues are broadly stagnant. So the Dahej plant, what is the utilization right now? At full utilization, what is the revenue that is possible? And when do you think we can utilize the entire capacity is my first question. Second, you mentioned unorganized and organized competition. How severe is it? Is capacity increasing in the industry? Is it declining in the industry? Something that would be interesting to know. On the whole company level, right, not just the Dahej plant, what is the current utilization that we are on right now? And at full utilization, what can be the revenues and margins that we produce is also something that would be helpful to know. And by when do you think we can reach the full potential of the organization in terms of the capacity that we have already built? That information also would be very useful if we can get it. So going forward for the next 2-3 years, what are the external conditions and internal conditions that you think are required for us to hit the full potential? I mean, is it that we are internally fully geared up in terms of not just capacity, but the product quality and the marketing staff? Is there some work that needs to be done there? Or is it that you want the external environment to be more conducive? On the external environment, given chemical industry is our primary end customer, it is visible, at least from the listed companies, that they are doing quite well. The chemical fixed asset providers and the companies themselves, these seem to be on an uptrend. So in that context, there seems to be a tailwind there. If you could educate us on if the demand environment, how we are looking at it, that will also be helpful. And over a next 5-year period, let's say 3 to 5 year period, what do you see? I mean, what would make you happy? I mean, where would you want the company to be, and what would make you happy over the next 3 to 5 year period? These are my questions. Thank you so much for your time.
Okay, Rohit. Okay, we'll answer.
Any answer person?
Any other speaker are there? Okay, we'll answer one by one. So, if you're going to from your first point was that 150 crores which has been maintained since past 4 years, and we have not been able to increase the turnover. The thing is that in that, when you see the volumes have been increased. But the steel prices in 2022 and 2025, they have reduced by 10 rupees since each year. So the sales volume has been increased, but the sales revenue, that also that is not capitalized with that we are not able to show it on the balance sheet that the sales revenue is same because of the steel prices. Secondly, the markets are very competitive. Every 2 years, 3 years, there are new players which come in and they take a market share out of our pie. So that also is a challenge right now, in which we have to maintain this turnover for another. There has been a challenge to maintain this turnover also for last 4 years. Now, being when we have shifted to the Dahej plant, the capacity which I've seen that the capacity over the Dahej plant has been utilized up to 65 to 70%. In Bharuch, we whatever barrels we are manufacturing, we have increased the volume. But we have still 30% capacity we can utilize in a coming year. So by next 2 years, maybe we can reach up to the full capacity of Dahej in next 2 years. The Savli plant was already was under the capacity utilization in Savli plant was 90%, and it has been the same. So basically, it's more because of the steel price fluctuation that the turnover has remained the same. Regarding the bottom line, normal bottom line in our industry, packaging industry is 6 to 7%. The net margin would be 6 to 7% for any packaging. If you compare the other competitors of ours, if you compare those, we are doing much better than them because of our prime products, because of some products which we have a good market share. So then basically in barrel industry, the normal percentage if you consider would be, the net margin would be 6 to 7%, and that is maintained. And in coming years also, I think the 6 to 7%, we can expect a 6 to 7% of growth each year, and the margin will also be maintained accordingly. The capacity is increasing. Again, the same repeated questions were Rohit had also this similar kind of question where we were asked that is the capacity utilized properly. So the Bharuch plant was the lease plant, and the Dahej plant is our own plant. There will be able to improve the capacity utilization, and we are in the process of that. Maybe in next 2 years we'll be able to utilize the full capacity. Regarding the 5 years plan, our short-term plan is to first reach the full capacity of the next plant in next 2 years. After that only we can make any other decisions regarding if you want to increase the top line, if you want to increase up to 300 crores or 400 crores, you have to put up a plant somewhere in the other location, or maybe we might have to put in a more some other product line like IBC, any packaging company, any packaging in the product we can introduce after 2 years. Once this stabilize, once this plant is having a full capacity, if we utilize the capacity, then only we will take that decision. So these are the broad views. And if you have any other questions, you can definitely get in touch with me or any other of the director. So they will be able to give you more view on that. So for now, we have dealt all the questions which were posed on the board, and I request the chairman to carry on the further proceeding of the meeting.
Dear shareholders, the company has made adequate arrangements to ensure effective participation by the members of the company and voting on the items set out in the notice convening the 33rd